Tesla's Q2 came and went, and the question differs. Do you buy more stock? Do you sell now? Because the earnings call wasn't that great. For some people that were out there, they're saying, I gotta admit, that it was downbeat, but overall, when you dig through the numbers, it wasn't really that bad. And I made a video about this 2 days ago because the stock dropped like 13-14% that day in 1 day because of the earnings. And it was just so silly. I made a video about it. But there's a lot of confusion now, right? There's a lot of people going like, okay, do I buy now? What do I do? Do I sell now? Those long-term investors like me, we're buying more, right? We're just buying more because we see that we like the numbers. But those short-term investors, those medium investors, they are panicking right now. They don't know what to do. They're stuck in the limbo. And hopefully in this video, I get to clarify that so you all have a better idea on what to do. Now, of course, none of this is financial advice. We're going to dig through the fundamental charts, followed by the balance sheet, all that kind of stuff. And trust me, guys, we're not going to go back to the Q2 earnings and read one by one because that's too long. I made my own charts here, which will be available on Patreon if you guys are supporting me there. Click in the link if you guys want access to that. So let's get down to it, guys. Smash that like button and hit subscribe if you haven't already. Let's go. Starting with the first thing is COGS per vehicle. This is very important with Tesla when it comes to their vehicles. Now, again, in the long-term scope, the vehicles don't really matter, but right now, for the short to medium term, it does matter. And what we're seeing here is from Q2 of 2022 all the way down to Q2 of 2024, cost of goods sold per vehicle has been coming down nicely from nearly 40,000 to now 35,000. But it's been 2 quarters that has actually been going up slightly. I will call it more of a stagnation. It's been, going sideways for some time. But in the bigger picture, it is going down, and this will continue in the longer picture. So this was okay. I was hoping that the COGS per each vehicle will go even lower, like below 35,000, but because they didn't produce as much in Q2, that kind of went against it because it didn't really benefit that much from economy of scale. I mean, the more they can produce of the same vehicles, the COGS go lower per each unit. Just simple economics. So this is an okay chart. I mean, this is something that we're going to take a look at longer term or medium to longer term, even though it's not going to matter. Because if they're going to bring out a $25,000, $30,000 car, this 35,000 or 36,000 is going to be dropped down to the mid 20s, 20Ks, right? So that won't really matter. Right now, it doesn't really matter. Now, moving on to the second thing that is kind of bearish, I'm not going to lie, if you're in it for the short to medium term, is the average selling price per each vehicle. In Q2 of 2022, they were at almost 54,000 per each vehicle. Now it's down to just below 42,000. I mean, that's down about nearly 25% since in just 2 years, which is insane. And it's also insane because they still have leading industry margins for EVs, which is crazy. But nonetheless, this is not a good trend as we keep going forward. But I do think once interest rates do get cut, this will reverse trend unless the compact car comes out, right? Then it's going to bring down the average selling price even more, but the margins will be more because they can sell it for more at that time, right? So this is not a good chart for short-term investors. They're going to look at this and go like, oh man, margins are going down. And the reason why the stock did go down like more than 10% 2 days ago was because margins was like 14%, the lowest it has ever been. And we can see why, because the average selling price went below in Q1, less than Q1, which was, we all thought that's going to be the bottom, and it wasn't, right? So this is not a good chart in the short to medium term, but again, in the long term, it won't really matter. Inventory, it is a little bit stagnant. I mean, it was a big drop from Q1 because they had a lot of inventory, and the reason why they didn't produce much was to get rid of that inventory. But nonetheless, Tesla, if they want to, sell as many cars as possible, they're going to have inventory for that. So this will continue to go up long term, especially if they want to sell multiple of millions. I mean, like 3, 4, 5, 6 million vehicles. You got to have inventory to sell a lot. It's just simple. This will continue to go up. Is it a big deal? Not so much. And we'll talk about why in the days of supply in a bit, because that's going to come up as well. Tesla Energy, which was the home taker in this Q2. I mean, just look at that. Look at that chart. Margin stayed the same at 24.6. but profits nearly doubled. This is insane. Like, this is crazy. Those who are saying Tesla is a car company, what's this, right? I mean, forget the energy, the FSD and the autonomous. Energy. This was nearly 50% of the entire net income in Q2. And this is set to continue to soar even higher and higher with the same amount of profits. And they got a second factory coming in Shanghai. So this is just the beginning for Tesla Energy, which is insane. This was a really good chart. something that I was looking forward to see as well. That was good. Looking at leasing profits, it hasn't gone anywhere for the past 2 years. That's because high interest rates, right? But I do think, again, once interest rates do go down, this will flip as well because more people can lease, more people can finance. This will help a lot in their leasing profits. Looking at days of supply, we can see that now every new Tesla that hits or gets produced, there's only 18 days before supply gets sold compared to 28 in Q1. Q1, it is typically high, right? Because nobody really buys cars in Q1 because they bought a lot in Q4. So Q1, everyone's just chilling. Q2 is really a good quarter, or quarter that you guys want to sit down and look at the days of supply, because that's what matters, and that's 18, which is insane because when you look at Ford and everyone else above like 3 months, like above like 60, 90 days, that's crazy. Tesla has it in 18 days, which is insane. Supercharging stations and connectors, they continue to go up. Now, I don't have a chart for this yet, but you guys can see in Q2 of 2023, there was 5,265 supercharger stations with just a little over 48,000 connectors. In the latest Q2 2024, there was almost 6,500 supercharger stations and nearly 60,000 connectors. I'm predicting that by end of this decade, there's gonna be more supercharger stations than there are gas stations. I'm just putting it out there. You guys can bookmark me too. I put it on X as well. For superchargers, you guys can see on the average, it is growing around 5.3%, but connectors are growing more at 5.5%. And Tesla did reiterate and said that, look, we are building more supercharger stations, but we're focusing on connectors more on existing sites. There used to be 12, now there's going to be 16 or 20 because now there's more Teslas. We need more people to charge. We have, everybody else who isn't a Tesla, legacy automakers with their EVs, they want to charge as well in our supercharger station because they're open to it now, right? So they have to have more connectors now rather than new supercharger stations. I mean, in North America, they have a lot of supercharger stations, right? It's just the rest of the world as well. But nonetheless, 6,500 supercharger stations worldwide and nearly 60,000 connectors. And this is going to continue to grow, which is a sheesh moment. But looking at these fundamentals, the only bad thing you guys see here is the Tesla average selling price going down. But that's not really going to matter in the long term. It's not going to matter in the long term when we're going to focusing on right now. Wall Street is waking up to energy, right? Imagine what's going to happen when they wake up to full self-driving and robo-taxis when those things happen. Now, I do have to say that Tesla did not add the full self-driving revenue income yet. That means that the con of this is that they are not as high as they would like it to be at the moment, even when they brought the price down to $99 every month. So we've got to wait maybe another quarter or two, maybe even end of the year for that. Hopefully, not too sure about that. We've got to wait and see. But I was expecting something like that in this quarter, but they didn't mention it yet, but they will mention it. But the rest of the charts, excluding the average selling price and maybe the leasing profits, everything else is looking pretty darn solid. Now let's go to the balance sheet and all that to see how that's doing, because that is pretty darn important, because that tells you the health of the company, if it's doing worse or better. But looking at these current charts, I'm happy with it. Things are in the right direction. That's what I'm saying. So balance sheet and cash flow, comparing to Q1 to Q2 of 2024. Cash position, they increased it by 14.3%, 3.6 billion in their cash position to now over 30.7 billion. That's crazy. I did not expect that. Last quarter, they lost money, right? They lost fear of cash flow. But this quarter, wow, 3.6 billion is absolutely insane. Current assets increased by 5% to 53 billion, while their current liabilities went down by 6%, which is really good. I mean, the ratio is 1.91, which is insane. This is really good ratio. I mean, it's actually been the strongest for the past few quarters. It's actually been probably the strongest. Like, that's insane. They can pay off their current liabilities nearly 2 times. That's insane. That's crazy. That's crazy good. Total assets now, they increased it by 3%. Total liabilities went up by another 3.5%. But nonetheless, the total assets to liabilities is almost 2.5%, not changing for the past 3 quarters. And this means that they can pay off their entire liabilities if they want today 2.5 times over. Like, this is such a healthy company and a lean company. It's absolutely crazy. And the total equity here is 66.6 billion, up from 64.3 billion. So shareholders made money here as well, up 3%. I mean, the company is super healthy. It's crazy healthy. And if you want to compare it to a car company, for example, compared to a Ford, which they lost, what is it, 1 billion, 5 billion in the recent Q2 just for selling EVs. Tesla is not losing any money. They're making money. It's crazy. We're talking about this as if Tesla is a car company. That's the crazy part. But we're not done here yet. Free of cash flow here, Tesla added about 1.3.5 billion, up from negative 2.5 billion from the last quarter. Pretty much a nice bottoming when it comes to Q1. And we can see Q1 of 2023 really, usually it's the low here. And then the big part is either Q3 or Q4. So it's up from here when it comes to operating to free of cash flow for this year until Q1 of 2025. We'll see how that is. But fundamental, guys, when you look at the company and you add this Q2 into the equation, man, the company's doing fantastic. The company's doing great. It's healthier than ever. You know, it's making more money in this environment than we ever thought it could for a car company. I mean, if you look at some other car companies, right, they're flipping losing money. While Tesla is still making money and they brought prices down like 20 to 30%. And they're still making money. It's insane. The other parts of the company is starting to make money. The energy, the full self-driving is going to slowly come in as well. Hopefully in next quarter after that, we can see. But overall, when you look at this, how could you be bearish on this company? They don't have debt. They have high amounts of cash, 30 billion plus. It's a lot of cash. And I can only imagine what Q3 and Q4 will be in that cash position. But when you look at this, the whole thing, man, again, I keep saying this, through the fundamental charts and the actual balance sheet and the cash flow of this company, they're doing wonderful. They're doing crazy well. Yeah, the earnings call was downbeat. Elon sounded very exhausted. But the core fundamentals of this business is looking really strong and really good. Now, for those short-term guys and medium-term guys, yeah, in the earnings call, it was a clear message, even in this earnings report, that, hey, for the next couple of quarters, don't expect anything from Tesla. There's no new news, right, until August or October 10th with the robotaxi event. So now until then, there's no news, so don't expect anything. So I could see why those traders left, or the short-term minds or short-term investors, they left. But the long-term investors like me and others, we were buying the dip. I bought the dip. And the stock today refuses to go down. Hopefully, by the time you guys watch this video, it's still green. But nonetheless, Q2 was a good quarter. It was a really good quarter. And if you read between the lines, it was a phenomenal quarter. But nonetheless, looking at it now, giving it a couple of days and, zooming back out and looking at it, the fundamentals are flipping strong, stronger than ever. The company is healthier than ever, positioned well than ever. That's my take on it, guys. That's my take on it. And what to do about Tesla stock? If you're a long-term investor, continue to do what you got to do, dollar cost average. And if you're a short-term investor and you're looking for a quick buck, get out of Tesla now. But not financial advice. That's all I got to say in this video, guys. You guys can check this video out for Tesla Data, which is my brother, and now he's not anymore after driving a Tesla or an EV for the first time, which was flipping crazy. Subscribe, guys. Get your I bought the dip t-shirt, 10% off, rip shorts, and I shall see you guys in the next video. Love y'all. See ya.